It is time to check in with Amanda Lang, taking a look at business this week. She, of course, is the host here of Taking Stock, which you can hear on the Iheart Radio network and on BNN Bloomberg as well. So, Amanda, it seems to me every time we've chatted in the past, 3 months, 2 months, inflation, interest rates, that's always top of mind because we keep waiting, holding our breath, waiting for the Bank of Canada at least to start maybe cutting interest rates. Yet we look to the U.S. where, again, this week, we had a hotter than expected inflation number. Now, it didn't roil markets, but again, it making people wonder if these cuts are coming sooner or are they coming, in fact, much later?
Yeah, which has been telegraphed, right, by our central bank. Our central bank governor, Tim Macklem, has told us it will not be a straight line down. They're kind of in the zone around that 3%, slightly below, slightly above, but it will be a long march. And so that is really the message. And I think the central bankers want people to really take that to heart, which is don't expect real relief on your mortgage rates. Don't expect it on any other forms of your credit anytime soon because they are not done yet. And even if they could start cutting, it's not going to be material because we're not really out of the woods.
So I think, when you talk about Canadian banks, for example, and I know they all reported about a week or so ago, pretty good numbers all across the board. And obviously they had, loan provisions that a lot of people were worried about. They didn't necessarily materialize. But now not all of a sudden, but lately, commercial real estate is becoming something that people are looking at going, wait a sec, are we ready for what's going to happen in this market? Because we know office space after the pandemic, companies started downsizing, didn't need as much space. They're playing this up to be something we really have to be aware of. Is this as serious a problem as it's being made out to be?
I mean, I hate to say time will tell, but we are in a long game with commercial real estate. The thing that happened this week and last is we start to see some of the big pension funds as they report their results, and you see their exposure to commercial real estate, and it is hitting. We're talking here about Ontario Pension Fund, the Canada Pension Plan. They all have big long-term exposure to this stuff, and it's in negative territory, and for some of them, like 8% down year over year. It's a slow-moving issue because, of course, these leases are long-term. So part of the issue here is that retail is still depressed post-pandemic, and we are, of course, changing how we work. So as leases roll over, you can expect to see some changes. Companies may downsize the footprint that they need, and then it sort of has a knock-on effect because often commercial real estate landlords and investors are also the developers in the world. So it sort of affects other parts of the market. I have not, Aaron, heard anyone say we're going to head into a real estate crash or a real estate-led recession that we've seen in the past where big developers go under. Some of them are. We are seeing some at the fringes not being able to complete projects. But for the most part, this is kind of expected, and we got to ride it out probably for another couple of years as those leases come due. Yeah,
beyond developers, though, I wonder if I mentioned Canadian banks specifically, they're the ones, handing out this money to developers. Is there a concern there, do you think? Or as you said, we saw this coming, that we don't have to worry about it perhaps as much?
No, they're pretty prudent. I mean, if there's a complaint about our banks, it's that they're too prudent.
Right.
You almost wish they would tolerate more losses and take bigger risks on people. But, I mean, you're right to say that they are on the hook. I was not at all surprised, by the way, that it was the bank CEOs who were among the first to say everybody back to the office because they own the debt on the office spaces and they want them filled up. So that's part of the kind of pressure to get employees back to work is there's a bunch of status quo investments, and the only way to make them work is if we work the way we did in 2019. But the banks there's no sign that they're kind of at risk from this exposure. It may not be pretty for them. There may be some nastiness for certain clients, but I just don't see any kind of contagion fears out there.
Yeah, you also let me know today, this is interesting, talking about going back to the office. If you're one of those people who have, reluctantly, I guess, decided that you have to go back or you're being told you have to go back 3 days a week or more in 2023, you may lose a tax credit and advantage you had that the government brought in during the pandemic.
Yeah, the CRA rules on work from home, allowing you to write off your business expenses at home is 50%. So that is 3 days in the office means you're not home 50% of the time. You're home 20% of the time. And so that is a problem. And a lot of people are going to run into that. Sorry, that's not 20%, it's 40%. But you're going to run into the inability to get the same deductions you got last year. I actually, when I saw this story, wondered whether there isn't a CRA rule on the other side. And that's why 3 days is a magic number for a lot of companies, that they need their employees in the office 3 days to call them deductible expenses. I don't know. I didn't look that up. But it's definitely true true that the tax year this year will hit some people, take them by surprise if they can't write off the same things they did last year.
Yeah, surprise, surprise. All right, let me hit on a couple of other stories. I don't know if you're on top of this story. We talked about it on the show yesterday, this idea that Loblaws is now going to basically lock you in the store until they can scan your receipt if you're using self-checkout. Have you heard any talk about this?
I have not. I do know that we've seen companies abandon self-checkout because there is such a problem with it, and there is a problem with kind of theft and inaccuracy. So I think lock you in the store is probably a bit extreme, but I guess if we want the convenience of that technology, the trade-off has to be some sort of, I don't know, checks and balance to make sure everybody's paying. It's definitely not perfect technology. And that's actually an interesting example of technology that came in and we thought, oh gosh, that's the end of the checkout clerk. Far from it. Some people use it, most people find it too tricky and too hard, and other people are abusing it. So I think the real live people will still be in the stores for a long time.
Yeah, I'm kind of with you on that. We heard from callers suggesting maybe it's time we go back to just more cashiers, because this implementation of self-checkout, which was supposed to ostensibly speed things up, has turned out to be a bigger problem than it's worth. And maybe we end up going back to where it was before and just add more cashiers.
Yeah, not all technologies actually are productive, right? In the end, maybe we'll get there. And I suspect there might be a bridge generation. Like our kids are going to be so tech savvy that they can manage it. Even I find it sort of, it takes me a little bit extra time to figure out, what goes where and how to scan this and that. I'd much prefer to deal with a real human. And those are important jobs too in these stores. So I agree this technology might have been a good idea that doesn't really add much to our lives.
Let me go to the last thing I wanted to bring up today, and that's the discovery, or the announcement, I guess, yesterday that we discovered the Canadian government 6 months ago started actually looking into TikTok and banning what U.S. regulators are now very close, apparently, to getting done in the U.S. Now, we can't find out, I guess, a lot about this because I heard the Prime Minister yesterday saying, well, it's confidential. What do we know?
Well, we know that we are reviewing it, and I think that should, I guess, maybe be obvious, but it gave me some comfort that we're on the ball and we're paying attention. This is a tricky one because on the one hand, TikTok is, of course, the concern is that it is easily manipulable by the Chinese government. The Chinese government, as we know, is an agent that is willing to spy on us and others. So the question is this a route to that? The interesting piece for me is we don't want to get swept up in a U.S. Kind of anti-China, anti-trade policy. They've had a lot of that, right? There's a lot of rules in the U.S. right now about whether companies can invest in China and whether they can import products from China. We're not going down that road exactly, so we have to strike a balance of finding our own policy. And I'm glad that they're really smart people inside our national security agencies, and I'm glad that they're looking at this.
Would you guess that if the U.S. does go ahead and ban it, that we just simply follow suit?
I don't think we'll blindly follow suit because remember, the whole Huawei thing, we take our time and we consult our allies and it does matter. But I wouldn't be surprised if we all agreed that TikTok is not so necessary that we need to leave ourselves open to the risk. And there may well be an outcome where, some American entity or European entity ends up buying it and recreating some version of it.
We shall see. All right, Amanda, thank you so much. Appreciate it.
Always a pleasure.